And as promised, let's focus on the markets and get you some expert opinion now. Veteran investor and founder of Mobius Capital Partners, Mark Mobius, spoke to us exclusively and discussed the global markets, sectors that he's betting on, the Credit Suisse turmoil, and much more. Listen in to that conversation.
Regarding the U.S., I've been saying for quite some time now, the Fed is going to continue raising rates. And that, of course, is putting a damper on the market. People must remember that the playbook for central banks around the world, particularly the Fed, is that they want to raise interest rates above the inflation rate. Now, the inflation rate that they use, of course, is the CPI, the Consumer Price Index, which now stands at about 8%. That means interest rates have to go to 9%, of course, if the CPI stays at this level. So I think more is in store for the markets. And as you know, for the S&P 500, we're right at the support level. If it breaks below this support level, then we're going to see more blood on the streets. The interesting thing is that India is really bucking this trend. It's amazing what the Indian market has done. And it speaks very well for the policies that the government has pursued, and the general buoyancy of the Indian market is very good.
Are you buying now in India? Because we have seen a clear shift. IT, which was leading the rally for 3 years, has taken a big backseat while banks have started to outperform.
Well, we're looking at both software, persistent systems, for example, would be one. And we're looking at infrastructure-related stocks like Apollo 2. So these are the kind of stocks we're looking at. We think those are the stocks that will perform very well going forward.
Hi, Mr. Mobius. In the past as well, you've been bullish on both those two names. But, in terms of approaching equities globally, I think Taiwan was one of the highest allocations, India and then China. How have things changed for India? Have you increased weightage in the last few months? If you could give us a broad number out there. And also, is India now top of the pack?
Well, I think India is really beginning to take more and more manufacturing share from China. And I think the government policy, the so-called Gati Shakti policy, speeding up the bureaucracy is going to be very, very good for India. You're going to see more and more companies moving manufacturing to India. And as you know, Apple has moved its latest iPhone manufacturing to India as well. So I think these are very good signs going forward. So we're going to be on the lookout for companies that manufacture this kind of equipment, and also companies that are going to contribute more and more on the software side.
Weightage on India has increased, though, Mr. Mobius, in the last few months, since things are looking, on the policy front, the economy as well has recovered quite a bit. Have you increased weightage to India? And what's the pecking order now? Taiwan used to be number one, I think, in terms of exposure. Has India overtaken Taiwan now?
No, not yet. We, of course, continue to look at India for possibilities of additions. But as you know, in our portfolios, we move very, very slowly. When we have a stock that we think is going to be good, we hang on to it. And that's the reason why, for example, the stocks that we have in India, we haven't sold. We continue to hold them. And the same thing is true in Taiwan, although in Taiwan, the weighting has been pretty high. So we want to reduce that by either decreasing Taiwan or increasing other countries like India.
Mark, you'd given us this thesis, and we kind of explored that in some detail about emerging markets generally doing very well, and foreign outflows out of India because of that, not country specific, and how there were some global funds now who were launching mandates ex-China, etc. Are you still seeing that? That is one. And second, later this month, in the middle of the month, we have that big party conference in China. Many are expecting that, once that is done, they will kind of completely dramatically change their policies in terms of zero COVID and attitude towards businesses, the crackdown there, etc. So there will be a big shift post that. Would you agree with that? Go on.
No, I don't think the policy mandates in China will change very quickly, particularly if she is re-elected and becomes the paramount leader again. So I don't think there's going to be a big shift. However, the Chinese are well aware that they need to have more dollars flowing into the economy. They need more funds to support the economy. So they will do their best to attract foreign investors, but within reason. The problem is for them is the reluctance of many investors to go back into China. I mean, we've been in client meetings where we say, well, we want to talk about emerging markets. And immediately the clients say, we don't want to talk about China, talk about anything else except China. So a lot of people have been burned in China, which means that India is in a pretty good position. Of course, the problem with India is that up to now, they've been rather restrictive and the market is rather smaller, less liquid. But the interesting thing is that if India is added to the various bond indices, emerging market bond indices, that could mean more and more flows into the Indian bond market. And of course, that could be accompanied by more flows into the equity market as well.
Okay, Mark, the other issue which is dominating headlines, or at least financial headlines, is what's happening in Europe with Credit Suisse and even with, DB perhaps. Do you reckon this could snowball into another Lehman, or do you think it's much smaller?
That's quite a surprise. And the fact that, you have a bank like Credit Suisse in the news is regarding that. But what it does is it begins to have people start thinking about emerging markets and thinking, wait a minute, emerging markets have been considered very risky and so forth. But how about these big banks in Europe and America? What's the situation there? So in some ways, it's quite favorable for emerging markets and for India, where people begin to think, well, maybe we should diversify a little bit away from Europe and away from the US.
All right, with that, a very quick break. Up next, we'll talk about what's buzzing in the commodity space. Joining in will be Manisha Gupta.